What makes a good process of selling a business different than a bad process of selling a business? In turn, good results versus bad results? Let's dig in. 5 pain points in selling a business and how to solve them. First of these is going to be speed, and it's important. Speed without losing detail, speed without losing quality, speed without losing results. And so that's not only speed of gathering information, synthesizing information, creating a narrative, but speed to the market. And when in the market looking to sell a business, the speed of winnowing down all of the interested parties to the right interested parties and to the optimal counterparties. And so it's important not to only do it effectively, but expeditiously in order to keep momentum and attain the results in the desired time frame. We've talked about this in previous videos. I'll put some screenshots here. But escalating conversations from discussions to offers, asking for information along the way, and facilitating a process that is on a railroad track from conversations through offers through diligence. Next is access. So if you have the right narrative and you can talk about it and get it to the market quickly, but you don't have access to the right parties, that's a problem. And different businesses can have different interest levels from different kinds of parties. And what I mean by this is, particularly in the space that we operate, $1 to $10 million EBITDA companies, you could have family offices interested, you could have search funds, you could have independent sponsors, private equity funds, large private equity funds, small private equity funds, large private strategics, large public strategics. And so it's important that whoever you're working with or however the process is being facilitated, that there's access to all of these parties. And it's a pretty diverse range, and it's different ways of having to communicate with people, different avenues of getting opportunities in front of people, but having the access to decision makers, to the evaluators, in order to get the player pass feedback as quickly and comprehensively as possible. It's important. Next is distractions. And so if the same result can be attained by spending 100 hours of our client's time or 10 hours of our client's time, it is a big difference, right? Because distraction is going to have a negative impact on both the patience of a client, but in addition to that, the performance of a business. Most people who run a company have limited bandwidth to begin with, and so any distraction that they must deal with is bandwidth that's being diverted from the actual running and operations of the business. And therefore, the less distraction, the higher the probability that the business is going to sprint through the finish line and have an upward momentum as you're nearing closing, which is good for the overall deal. And so information has to be provided to interested parties in a way that minimizes the distraction to the client, and that's knowing what information to ask for, what information to provide, and where to draw the line to say, hey, you have enough information, now we need an offer. Next, discretion. So in addition to facilitating the entirety of this process, it is incredibly important to keep the process quiet and confidential. Employees, competitors, customers, clients, community stakeholders, at some point in the process, everybody knows at the right time what's going on, and that communication it should be deliberate and well planned out. However, it should not be something that just leaks out or that someone blurts out. And therefore, it's incredibly important to maintain that discretion throughout the process through the use of NDAs, through the use of only communicating with real parties, and through the use of constantly winnowing down the audience in a way that the incrementally confidential information is being shared with an incrementally smaller group of people, right? A lot of processes from other people we've seen in our business can be 20,000 people finding out all of the information and not winnowing down. In our case, we want to not only reach out to a targeted audience of considerably less, maybe 100 people in a particular party growing to 200, but as we are winnowing that down, that is how the information is let out in a way that those parties that are not interested are not privy to much confidential information. So we always say non-disclosure agreements and other legal elements that we implement into the process are important, but you want to proceed almost as if they don't exist, such that you're very, very careful about what information is shared with them. And lastly are results, and more specifically what we call multivariable offers. And so too often in the process of selling a business, the focus is entirely on value. How many dollars is someone being paid for a company? What's the offer? What's the amount that the valuation that they're going to be applied to the business? And in reality, that's one variable. Structure, transition periods, what happens to the employees and the stakeholders, those are the other key variables. And so we always want a multivariable offer that highlights all of these things. And in the process of negotiating with multiple parties, we're optimizing for not just value, but again, structure. How is that value allocated from the time of closing and thereafter? Transition period for ownership, executives, other key participants in the business, as well as what's happening with the stakeholders. How do we protect the employees' interests and things of that nature? And so 5 pain points in selling a business, how to mitigate them. Pain points we've discussed today: speed, access, distraction, discretion, results. If these pain points can be mitigated, if these pitfalls can be avoided, you can almost guarantee that the results are going to be better. So that's the thought for today. Hope the week's going well for everyone. Keep pushing forward. God bless. We'll see you next time.